Hello, welcome everyone to our Wednesday workshop at 1. Thank you all for joining us. We're going to give it a few seconds for everyone to go ahead and jump in, and then we will get started. I hope everyone's having a wonderful week so far. All right, so today's topic is the alternative solutions for the real estate investor. As we all know, the marketplace is pretty volatile right now. We have high interest rates, and houses just aren't staying on the market as long as they were before. So we have Mariana Kogel today. She'll be presenting some alternative solutions for the real estate investors to keep, diversifying their portfolio and, things that they might not have thought about before. So just before we get started, NuView, we are not tax advisors, CPAs, financial advisors. We don't suggest you, invest in anything specifically. You have to do your own due diligence before you make any investment. Definitely want to discuss your investments with your financial advisor or CPA before you make any investments. What we are is called a self-directed IRA custodian. So our clients, they use their IRAs, their health savings accounts, solo 401ks, and education savings accounts to be able to invest in what's called alternative assets. So the power of self-direction gives you the ability to invest in these alternative assets that you might not even know you can invest using these types of vehicles. The reason you would want to do it is because of the tax savings that comes along with it. If you're investing using a pre-tax account, you are going to grow that retirement portfolio tax deferred. And if you invest using a post-tax account, it's going to grow tax-free, well, tax exempt, and then you can take it out tax-free when you're ready, like a Roth IRA. And you also get to diversify that portfolio into different types of assets. I'm going to cover some of those investments. You're also investing in things you know best, things that you probably are already doing with your own cash. So these are the types of plans you can use to be able to make these investments. Your personal plans, your traditional IRA and your Roth IRA, you can only contribute up to $6,000 a year. Most people get started with the traditional IRA. If you have a previous employer 401k plan, that money could be rolled over into a traditional IRA. If there's any post-tax dollars, that would go into the Roth IRA. And that's how most people do get started. If you are over the age of 50, there's an additional $1,000 catch-up contribution. Now, the biggest difference between a traditional IRA and a Roth IRA are the way that they are taxed. The traditional IRA is taxed when you take the money out of the IRA after you're the age 59 and a half years old. So it's a tax-deferred account. The Roth IRA is a tax-exempt account, and you don't pay taxes on that when you take the money out. But you do pay taxes on it when you make either a Roth conversion or a contribution to the Roth IRA. And then it'll grow tax exempt after that. Then you have your employer plan. So anyone listening that's self-employed, the solo 401k and the SEP IRA, you must be self-employed to be eligible for these plans. The solo 401k does not allow you to have any common law employees. You can contribute up to $61,000 a year with an additional catch-up contribution of $6,500. And then the SEP IRA is $61,000. It's 25% of whatever your gross earned income is at the end of the year, can be contributed to the SEP IRA, just can't exceed the maximum contribution limits. And then the simple IRA is if you have small businesses. So if you have a few employees, any employees that are eligible for benefits, they can also have a simple IRA. You can contribute to $14,000 a year with an additional $3,000 catch-up contribution if you're over the age of 50. And then your employees, there's a mandatory employer match of 3% with this plan. So most employers prefer the SEP because of the higher contribution limits, but it's really up to you and your decision on what your strategy is that works best for you. Then you have other plans, like we call them your specialty plans, education savings accounts. So these are college savings accounts for your kids or grandkids. You can only contribute $2,000 a year. It is not tax deductible, but it can be taken out tax-free for any school expenses. And then you have a health savings account. Now that is a medical plan. If you're in a high deductible healthcare plan, you have what's called a health savings account. And if you currently have one of those and it's at a bank or something, you can always transfer those funds over to NuView, and then you can self-direct those into alternative assets. Now you can't contribute a whole lot of money, $3,650 if it's individual, and if it's a family plan, $7,300. And an additional $1,000 catch-up contribution if you're over the age of 55. So the power is partnering these multiple accounts together on investments if you're eligible for these, and bringing other family members in that might be eligible to be able to invest with you. And that gives you more buying power to be able to make these types of investments. These are the most common types of assets that clients do buy. So real estate's the most popular, and there's all different types of real estate, whether it's offshore, commercial property, land, manufactured homes, rental properties, short-term rentals. There's so many different things in real estate that you can do. And then you can also invest in what's called private entities. That's probably the next most common. If you're investing into somebody else's deal, like an LLC, a joint venture, something like a syndication, multifamily, self-storage, mobile home parks, you're investing in the company. So that's structured a little bit different. That would be under the private entities investments. You can also do private lending, mortgage notes, tax liens, and then cryptocurrency you can also buy. So if you have that cash that's sitting there, you can always use your money and put it in a crypto account if you like cryptocurrency. Cryptocurrency is kind of volatile, in my opinion. It's kind of like the stock market. It is up and down, so just keep an eye on it. With that being said, it's my pleasure to bring and introduce Mariana Kogel. She's spoken for us in the past. A few things about her. She's dynamic. She calls herself an investpreneur, and she has over 15 years experience in driving sales and client satisfaction, mostly focused in real estate. And she delivers advice and expert guidance and maximizing on your property investments. So she works with a lot of real estate investors. She's also a client of NuView, and she holds a solo 401k. So a few other things is she focuses her efforts in Washington, D.C., Maryland, Virginia, and Florida. But she also speaks multiple languages, so that's pretty cool. She has clientele from all over the world. She speaks English, Romanian, Russian, Italian, Spanish. So that gives her the opportunity to be able to speak with other people in these other real estate markets that might be offshore. All right, Mariana, are you there?
Brian, thank you so much. Technology. As we're still going through all the technology, after the COVID and everything. Anyway, thank you so much for having me, and I appreciate the introduction.
Of course. You can go ahead and start sharing your screen and get started, and then I will see you at the end of the presentation for the Q&A.
It's for sure teamwork. Anyway, thank you, everybody, for your patience. I appreciate you being here. I appreciate NuView. As Brian mentioned, my name is Mariana Kogel. I have quite a bit of experience in real estate. And real estate actually is my passion. Besides the fact that it's my passion, I also help people. And another question of mine is actually financial education. And as you can see, the model of my business, the way I drive my business, it's actually craft your legacy through real property investments under grace and perfect ways. The name I came up with in the model is really deeply speaks to my heart. It actually incorporates its incorporation between intelligence and the knowing, the knowledge and the knowing. Today is in fact first time when I'm sharing a knowledgeable an educational event through Metamorphosis Journey, the new nonprofit that I created specifically and intentionally to share the knowledge in real estate throughout entire world one day. The topic that we will discuss today is alternative solutions for real estate investors. The full topic that you can see, but of course we're going to dive deeper and deeper in every single topic: long-term investment planning, wealth intelligence, investing domestically, and investing internationally. Also, at the bottom of each page, you will see the QR code. If you scan this QR code, it will download my information directly to your home. Let's move on. So as we were saying, first topic, we'll talk about creating long-term investment plan. It's absolutely timeless topic. It's absolutely foundational and basic, and you'll see how this ties up with investing domestically and internationally. Is this being said, people who cannot stay to the end, please listen, come back to this video and listen to the end, because at the end, everything is going to actually flow in one funnel. And you will see how every single, let's say, number, as I mentioned, 3 to 10 years, how everything it will tie down at once. So as we're pursuing that first topic, creating long-term investment planning, how this is important. Well, every single investor, I think, on the personal and as a matter of fact, it's definitely on the business side, we have to think about get clarity where we're standing and get definitely clarity on where we're going. When we board a plane, we know where we're flying to. When we get on the road, we know where we're going to. Basically, might sound, but then how life is. Well, beside that, let's when we flying somewhere, going somewhere, let's enjoy the route, right? Because sometimes it might take from point A to point B a couple of months or maybe a couple of years. So why wouldn't we enjoy the journey? And when I mentioned journey, the journey has a deep meaning here because I always advise people to think about each 10 years where you wish to be, where, for example, where your family wish to spend vacation. As a matter of fact, I don't even like the word spending because especially when it comes down to the time is invested. Nothing in this world was spent. It's about what you're getting to. So where do you like to invest your free time? Where do you love to travel to? This being said, while we talk about US, for example, well, if you like skiing, why don't you plan ahead and invest into a property in the mountains where you can purchase, number one, it's crucially important, where knowledge, it's all of it ties in at once, where let's say in mountains you can do, but also you can buy a property under LLC. Brian mentioned earlier, there's so many different ways you can purchase a property, which ultimately you have to know the tax implication. You have to understand the location you're investing at and how to, because real estate is such a vast topic, there's so much to know. How do we actually filter through, maneuver through all this knowledge and how we actually create a plan which is important for us? That's why it's important, number one step will be to get clarity where we're standing and get clarity where you go. 3 to 10 years, and then let's make our way back. Moving forward to the knowledge. Knowledge is tremendous power, and before you embark this journey of real estate, or if you already in this journey, well, it's always important. You never start growing. There's so much to learn about tax implications. Well, let's say if you're on the residential or commercial real estate, well, how should and what should you do that ultimately government through IRS laws allows you to deduct certain expenses? Do you invest in what is your long-term plan? Let's say 3, 5 to 6, 7 years from now, you'll have a high income. Well, some counties, some states will allow you to have a high deduction if you invest in agriculture or if you invest in mining. So how do you maneuver for that? Well, the clarity up front and definitely to know your risk-taking comfort zone. Risk-taking, meaning how soon would you want initially, if it's your first step of investment process, how soon would you like to see your process to come back to you? That definitely ties up with the point where we talk about planning. Well, if you plan property, let's say you're an investor who already has a couple of properties. Well, how do we leverage? Right now, we have a couple of cash flow properties. Well, which this is great, but interest rate rises, and also we always want to grow. You never want to stay still. With this being said, so what will be the next step? Now you could refinance these properties and or into the next project. Well, you could juggle 2 projects at the same time. A long-term investment where multi-family units potential, an initial couple flips and flips here and there where we generate quick cash that will feed the next project. Moving on, and now what is one of the tremendous and super important things into building our wealth, building our legacy? Definitely the power team and the mindset group that you surround yourself with. Well, my journey honestly began 6 years ago with the Rich Dad Poor Dad book, and that has opened an for a full of transformation. And, I really did not know what I'm stepping into, but I really stepped into something tremendous. When we talk about how selecting our power team, came to conclusion, there are a couple of things that are super important, and I know this is I'm facing transactions now, is I'm working with different clients. What is important when I select my team members? Definitely investment mindset, because you could have those attorneys, or you can have those lenders who think more linear, which is one transaction at a time. Well, it's nothing bad, it's nothing wrong or right. It's just what works for you, what doesn't work for you. Always have to be very careful with your team members. Investment mindset, and another topic that time-honored principles, which are tremendous. Well, you want to surround with those advisors yourself with who will tell you when you're going into your own direction. You want them to tell you that you have to stop, or you have to move forward, or you have to move faster, or you might need to completely stop and then try to go a different direction. When it comes down to selecting your team, a lot of investors would, in a couple of years, I've run into a situation with investors. They are very, and don't get me wrong, I absolutely understand that every penny has to be counted. Well, taking on the services, you potentially don't realize how much money you left on the table. And as it is being said, investors miss so many opportunities just because they don't see future incoming profits, and they're number one, do not have the knowledge overall how to utilize everything. So, and real estate is not about how much you spend, and I'm using this word intentionally because in this case, people think they are spending on those CPAs, they are spending commission payments to those realtors, they're spending for those property management companies instead of thinking that it's investment. Because ultimately, if you surround yourself with people who, number one, also passionate what they do, they're going to take you and you guys can grow as a team. So it's the practice that a lot of investors miss on. So surround yourself with right group of people. And we talk about, after that, we'll talk about location, but you will see also how everything goes in together. When we, super important, title companies. So let's say the title companies that you have one, two, or three underwriters, well, they are title companies that may have up to 5 underwriters. I was working with an investor who purchased, who were facing to purchase a property. It was a perfect, ideal match because there was judgment, there was liens, there was credit. It was unreal how much it was a deal. Well, it took to the title company 5 to 6 months, but ultimately, which was the most important, my investor made a return between 15 to 17%. To some people may say, which is not a big return, not a big profit, we'll consider it was beginner investor, and also it was a both market. In Washington DC market, I'm licensed in Virginia, DC, and Maryland. Well, Virginia and DC are completely total 2 different markets. Virginia is very much driven by schools, very much family oriented. Well, you cannot exit the property selling and most leveraged way, of course, when it's old school, when people are trying to enroll their kids in school. And then interestingly, a lot of schools, private schools, their enrollment starts in February or March for the following year, for the following fall. So that's why market in Virginia, for example, is super ideal for sellers, for owners in spring. Well, we're looking at the DC market. DC is very young, professional oriented, government, of course, and it's super international. So when you think about the DC area, how to invest in DC, then honestly, they're not the timing, but it's actual location that is tremendous. If you look at investing in DC, Embassy Road, you'll have fun there at any time. When people talk about, well, DC, it's a higher purchase price of fund. Well, it is, but also we have to think about the risk taking in this area compared to some other areas. As of right now, we all know that in Florida, Miami-Dade, for example, it's a tremendous market, but the county beside Monroe County, it's not a growth orientated. Let's move forward to the next topic. We'll see how all this comes back together. When we talk about investing domestically, and then we will talk about investing international. I really want to dive deeper in investing domestically. That's why I kind of went through fast on the first few points, but you'll see how those actually tied up deeply with how do we choose a location in the United States, right? Especially with interest rate and now market, people are unsure what direction to go. Well, let's define number one, and this will turn out back to knowing your long-term goals, where you're standing right now and where you're going to. And the reason why, there are investors who approach real estate from two different angles. Right now, I'm going to dive deeper in starting initially with the location. How would we determine one location to invest? Let's say for beginner investors, somebody who is already has done property transaction, and let's say somebody who is thinking to fully adventure elsewhere. Well, how to choose domestically the location, right? So first direction, investors go and look on that location. Other group of investors, they will look into a strategy. They will pick maybe 1, 2, or 3 at the most, because tax link or mortgages. In the tax link, when we talk about, we have tax link, tax deeds, and then we'll have different states. And of course, those investors that dive deep in a particular strategy, they have mastered, and then they're explore and they go into different states. Well, this kind of people, it's also great to have in your power team, because you want to deal with people who are very passionate in what they do. They have done some transaction, and they can really take you on advice on the right path. When we talk about how to determine the location, well, let's go step by step. So number one, back to where you want to go and what are your long-term goals, right? When we think about pro-growth cities and counties, well, pro-growth counties are those, of course, who, they invite different businesses. They have so many different headquarters in a state. And then you have a county which is more agricultural and they're trying to preserve land. Well, I live in the Fairfax County, which is super pro-growth, and we'll have couple counties to the south, Stafford County, Pennsylvania County, Pennsylvania, I'm sorry. Those counties tend to preserve the land, and they are looking more into allowing single-family owners to have probably 3 to 4 to 5 acres, maybe 10 sometimes, it depends on the zoning. So back to your long-term goals, maybe your next step has to be an agricultural land. Well, let's talk about for people, because majority of investors, I believe, at the initial or middle step, they're still considering investing in cities, counties which are pro-growth for the cash flow, for the long-term or the short-term, or they might have a couple different deals going together, right? So number one is well established, start with the county, understand which one is a pro-growth and not which one is not. How we do that? Well, first step will be definitely to connect with the land development council. This I would say to save your time, to filter out so much clarity in your mind. Start with development council. Some counties, they will have their comprehensive plan around 10-ish years. Well, in Fairfax, in Pennsylvania, Fairfax, Fredericksburg area, our counties will have up to 30 years. Well, one of the points, should we really plan up to 30 years and create our goal? Not really. Remember when I mentioned initially, have your long-term goal between 3 to 10 years. This way it turns out with a comprehensive plan. This is very strategic and very intentional. Every single number, everything in real estate matters. Everything. They're not such a detail that doesn't matter. You have to be very careful of how you analyze and having the knowledge to analyze. With council, right? So right here we'll have plans. Certain counties go up to 10 years, certain goes to 30. Well, my advice always to my clients is think about and use their comprehensive plan up to 5 to 7 years. Get them very in counties where comprehensive up to 10 years. Use up to 5 years. Establish your goals up to 5 years. Counties that will show the history, the trend that their plans are many times on place, and they do follow through with their plans, well, why would we plan up to 15, 18 years? Also, while we're doing the research in the economic development council, focus on diversity of businesses. Fairfax County, back to Fairfax, back to Miami-Dade County, it's very diverse. When again, coming back to DC, we have at least 25 different diverse businesses. Well, how does this market tend to be more full from all the recession-proof area? That's how I like to say it's a recession-proof. Because in my opinion, if the C market is down, numbers are not good, and markets still down badly. Well, I believe the entire world has much more problems in the past than this real estate. Because here we have emphasis in the diversity of businesses in this area, it's tremendous. The benefit also for investors in this area for thinking long-term passive income, military, military personnel, employees of that Pentagon, White House, they have orders between 2, 3 to 5 years. We'll have quite a few hospitals where doctors rotate in the same time, 3 to 5 years. Well, that where it ties back home to thinking your long-term goal for the passive income. Hospitals, an interesting point when we talk about hospitals, there are certain hospitals, VA hospitals where military personnel must go through if they are looking for some kind of issues they have, and they might need government to approve them for certain things, for certain amounts to be paid to them. Well, why right now, Virginia at the VA hospital is being built in Fredericksburg. It's going to take her another like 2 to 3 years or potential. Well, why don't we dive into right now to understand what kind of employers coming there, how much this employers will be paid, which is so tremendously important when we analyze it. So now, as we narrow down to the county, we'll figure out this growth. We'll also figure out where the hospitals coming. Next step, let's figure out how much their doctors, nurses, how much they get paid. Because if you're looking for passive income, we can't really build an eligible luxury apartments because it will not support the market. So the market knowledge and understanding the market is so important. How many employers, how much they get paid is going to come to the place. It's going to be a very important topic to know. When we talk about economic indicators, and what we also can look in the location to determine if this location is for us, if it fits their goal or if it does not fit their goal. So on the economic indicators, of course, population, which is simple where population migration. Also, for example, DC is moving the TSA to Springfield area. Well, it's a big government facility that is getting built in Springfield. As a matter of fact, it's just finished. They did a tremendous fast job in 2.5 years. They're fully completed. Well, apartment complexes around there really support this employers if they are enough supply. Well, that is something that has to be analyzed, and then I would say certainly that there is not. I live in the area, I know the area, so there is not enough supply for it. As this being said, also local agencies like Chamber of Commerce that will help you to understand population migration. With interest rate rising, well, when I would like to tie up all this at once, population migration, you follow the direction people go to, you have to understand what form your funds are in, how quickly you can liquidate those funds to invest in this project. So back to the timeless long-term planning, you have to understand where you go to pull the levers. Again, it's not how much money you spend and how much money you left on the table. Also, Chamber of Commerce for population migration and where everything is going to, where it is important to understand is the area, what other businesses in the area would say that this area needs a commercial real estate potential. So for people who doing commercial real estate, double net, triple net, well, we say somebody wish to grow into the commercial, your long-term plan, 3 to 5 years you do residential, you cash it out, you can invest into commercial. It depends on commercial. I know after COVID, people say commercial is not bad. Well, it depends. There could be a mixed use. The reason a mixed use is great because for the tax purposes. And again, IRS is an amazing book. And one of my favorite writers, Ken Macro, said IRS pretty much has 95% of the rules and laws that people can follow to build the wealth, and only like 5 to 7% something that will not, it's not for our benefit. Well, it all depends. Again, the angle somebody's viewing a topic. Under the apartment occupancy vacancy rates, that is something if you're on the residential and you're thinking to do long-term planning. Again, that's how I would say about this bullet point. So to determine location you wish to be, let's say if you are a beginner investor, of course, I would recommend start with your local area. Get your favors right, you know, and figure it out. Do a couple of transaction, couple of flips maybe in your area, buy and hold, see how you can manage how things working with tenant for you. Not necessarily on one or two properties, you don't really need a property management company, something that you can do by yourself. No need to throw money away. As we're moving forward to the next topic on investing domestically, a super important topic, as I actually mentioned in the beginning, strategies. Well, now we determine a location. Let's say if you are an investor who needs to understand and grow and become stronger in your knowledge and moving around a certain location. When it comes down to strategies, now we determine location, how do we purchase a property? I would say between strategies, topics, and points that I mentioned, along with creative financing. These two are tremendous. And as much as I love Robert Kiyosaki, he always said, get knowledge. Knowledge is so powerful. You cannot imagine how much it could leverage your profit if you know 1031. For example, I talk with people who show their properties, investment properties, not even knowing that 1031 exists. This is, in my opinion, it's an absolute crime against your own financial. And the team members that you selected definitely did a poor job to assist you and help you in growing your wealth. So back again, there's nothing that does not matter in real estate. Team member strategies, your finances, your goal, everything ties in the plate. And also you'll see when we'll be moving to investing international, that is even more crucial to understand and move at a bigger spectrum. When we talk about strategies and creative financing, absolutely love this topic. Well, we narrow down to the location. Now, what do we do from here? Well, that is going to comes down to how well connected and who your team members. Do you have a tax lien or short sale professional, somebody who you already connected or you are connected at this time? Many times people say, well, I live in Florida or I live in Minnesota, and it doesn't matter what state you live in. If it's the location, did some transactions in your area, then let's move where the area, of course, is a little bit more investor friendly, where the risks are low. That's why I know your cap rates, it's important. Cap rate, other words, your risk-taking comfort zone. So now we're picking a strategy. Well, between foreclosure, pre-foreclosure actions, let's say you drive around, or somehow you notice a distressed property, right? Or an agent, a real estate agent shared with you that a distressed property would be a great investment. Well, how you buy, where you buy, it's important. My buyers, I always challenge them to think about long-term passive income. When we buy, I tend to, number one, of course, get a feel of how people think about investment, and also how comfortable they are buying the property that you know you want. Well, this benefits you because the property is fully remodeled, that every single penny has been leveraged. Also had a seller who advised to add 2 bedrooms, turn powder room into a full bathroom, and created a clear profit of 200K, which is unbelievable, right? You might think it's only 2 bedrooms. Well, 2 bedrooms in Vienna city in Fairfax County means a lot. So foreclosures, auctions, uncertainties happening right in the court's steps. Well, how do you start from there? You cannot know everything. Don't try to go crazy and trying to learn everything. Surround yourself with team members, with people who will who you can work as a team and grow in together. I definitely recommend you have an understanding the knowledge about how discount notes work, because you can pull this tool out your back pocket anytime. My favorite VA loan eligibility dynamo, and this country will have so many veterans and active duty military who don't have an idea what diamond they're sitting on, how they can leverage and use that. Well, this being said, at one point I had, we worked at this point, she told my friend to me, she was a star. She knew the way VA works ins and out, and she followed through, and that's just passive. She's cash flowing monthly to the provinces at $1,800, which is unbelievable for somebody who just starts, right? When we connect and we're saying with sellers, what other creative way to do. When we work with the seller, let's say, seller could do a short-term overfinancing, but you should know this in order to suggest to the seller. You should know about the fact that, let's say you get a loan and you have to put it down payment 50,000, 100,000, there's no way you can do that. Well, seller can do and put this 100,000 payment from the equity and the property they have, and you just buy a note on that amount. And also back to what Brian mentioned, it's important to know different fund or hold money in that company in the area where you can liquidate, where you know you can have a faster access to. And also a company that will advise you what you have to do. And not, they don't advise, actually share and have different webinars of this educational. Interesting thing I learned about, seller can also, you can suggest to do a loan subordination to the seller. Let's say you purchase a property, you have funds to buy the property, you can get a loan, but then property does need a big construction. Well, if you know about loan subordination, you can talk with the seller, you can do a joint venture with the seller. Of course, we can jump into equity partnership and list with option to buy. All of this finances, all these ways and strategies can be used only when we know where we're going. Again, working our way backwards, knowing where you want to be 10 years from now, then you can figure out your first and next step. Because real estate is like Titanic. You start driving, it's very hard to stop, but it's very hard to turn it back, which sometimes it's almost impossible. Moving on, and moving on to one of also my very topics that I'm very passionate about, investing internationally. Well, now in the United States, we do have interest rate rising. Our market, we aren't sure where we go. So how should we proceed, or how should we look on global real estate, right? Don't leave this opportunity away just because it's so much it could be done. I'm certified internationally. This being said, I'm also learning. I know that there, trust me, maybe I know any other country in the world that will have such a strong system, rules, regulation, supportive tools that the United States has. As this being said, you can get yourself in a big trouble, but also you can leverage there. And I like to see, I like to focus on the good side. So instead to inquire all this knowledge and how and where should we go? Well, if you really invest internationally, and as a matter of fact, I was talking with Brian, you mentioned whatever plans people have in their self-directed, whatever goals begin, I'll let this happen for them to discuss, you can invest internationally. So again, not advising, there's so many different ways, but it's something for you to know as a tool if you might be interested. What country to go, as I mentioned, being certified internationally, a lot of countries, you just have to be super careful, but not just careful, you have to get that knowledge on how a country operates and what is needed. So what you have to, how to pick the country, I would say, think about where you wish to invest your time. Time is limited, we all have limited time. So time should become an investment. Where you wish to be, where possible you might want to leave, and also where possible you might want to retire. Our retirement funds that an amount that you can have in from US, their retirement here, overseas in Caribbean, it might take you so much more further ahead. And also that quality, because people are different journeys in their life. Then where ties back where I was talking about, let's enjoy the journey, where we go 10 years from now. Well, if you know you want to retire, let's say in Caribbean, why don't you invest in a property today in Caribbean? Travel there to your own property. You don't pay for a hotel room. You stay in your own property, and also while you're not there, you cannot rent it out. That's why it's important, just like same system in the US. Know have your team, know your the most fundamental of real estate, right? Have property management. Back to the topic that I was talking about, team members. So let's say topic number one, what should you start beside the fact that you identify the much vacation possible time? Of course, we have to see what is the history in collaboration with the United States. I'm not going to go on the politics right now, but everybody know what I'm trying. What is the code behind? Think about where you want to invest. And also, governments overseas, just like our local states, here they are pro-growth, they are welcome investors, they want foreigner investors to be. And how do they want? Because they have much better welcome residencies to investors for 100,000 or 200,000. You can purchase beautiful property in Portugal, and you can have residency through this investment. There are different countries, and you have to know Grenada, right now has absolutely incredible investment opportunities. So again, you have to understand where you're going before you can jump, especially at this level. Language, let's say if you are initially looking for a country, not every country requires to translate official documents in English. So I would say start with that first. You don't want to face the country where a document is presented to you. Of course, you don't understand the language, and then top it all to get an interpreter who truly will translate. I've been a witness of some translation to be done, which is we're so far away from the reality, and it was both of the multiple languages. I noticed that it was absolutely wrong interpretation and translation, because the translator was not a Native American, but it was the translating just the knowledge, not the total meaning per se. Foreigners who speak other languages absolutely can understand where I'm going with this. So, for example, Belize, when I traveled to Belize, and I affiliated with the developer of Belize, the reason I decided to also affiliate with this developer, because he's very super strategic, unbelievable. He picked a couple of countries in Caribbean based on how favorable climate there is for foreign investors. What is the system and that history? How is the government of those countries? So Greece, for example, is English. When I was flying there, I honestly felt like I'm in the United States. On the plane, majority was speaking English in restaurants in the street. There were so many Americans. Well, there is access to the country. That is another thing in my next bullet point, how to choose international where to go. Assess where you are, and of course, assess where you wish to invest. Traveling is tremendous. Probably like 10 years ago, traveling to Caribbean was pretty difficult from East Coast. So now we have so many airfares that will have much more convenient traveling. We don't want to do 2 or 3 connections just to get to your property, right? So this is something which is very important, and also ties up what is the collaboration of the United States, right? So you can see how everything comes into your place. When we talk about agencies, local agencies, tourism, healthcare, banking system, how this entire system, how advantageous they are to foreign investors, how fast government is moving. And again, the travel, if you think about to do a long-term investment and turn the property for your own investment property, well, convenience to you to travel, but also think about who is going to be your market, because you also want people from other countries from entire world to have an easier access to the project. Again, it has long-term planning. You might say, well, I might travel to this property once a year, so to me it's much more important this property to be much more accessible to outside, to worldwide. Well, now we think about where we have to analyze where people from overseas travel to. You have certain countries, certain nations tend to travel to specific areas. Well, you want to keep that area where it opens up a wider opportunity, a wider market. So cash flow, less vacancy, same concept, same absolutely concept. Moving to next point, and especially the reason why I have chosen to become licensed in Dubai, and I have affiliated with Reagan, with a developer in Caribbean. Definitely professional, personal choice. Everything that I share is also is the way I see real estate and the way I feel the journey. So it's location based where I would love to live, might potentially retire, and also how's the investment climate there. Specifically in Dubai, Dubai, we all know UAE has several emirates. Some emirates, they are much more open, some of them are not too pro-growth. Well, I know that there's a very big mix of opinion on Dubai, and I completely understand. Well, personally being there, I know and I saw that how government works, and you can purchase a property there, believe it or not, in a matter, and the system is so strong, you can purchase it in a matter of like half an hour. The way title, they not so much bureaucracy, what we have, but also is the thing that you have to be careful who you affiliate with. Well, when I saw the developers that will guarantee you between 6 to 8 to 9 to 10%. On the 10% guarantee, you have to be in the step and at the point when the property is getting built. You get several different developers. So I would say you have to be very careful who you are affiliated with. I could not in any case advise anyone to invest if I would not be there. Brian, I see, do I have some time or I have to wrap it up?
How many more slides? We've got about five more minutes. 5 more minutes,
perfect. I'm gonna fly a little bit through. As everybody can see, investing internationally is very powerful topic, is very deep. Let me move forward to next one. This is a little bit information about myself. And now also, as I mentioned before, pick and choose your team members. I absolutely believe to when I talk with anyone, I try to ask questions like, how do they get the education, and hear and listen to what they have done, how they think, which to me, as I move forward a little bit, let me go to next one, then I will come back to this one. Well, this is actually my mentors and my college team, and start actually with this book right here. And this book right here, 6 years ago, has opened the door to everything else. This one is in the needle and the core of my heart, and it drives everything what I do every day. And our values are coming from here. And of course, if it's one of the things that we look at, these books are arranged just in a different way. It's very fundamental, but also how we look at the things. I went through the course of legacy education. I took probably 15 courses, which you can see the knowledge came from here, which is unbelievable. Let me go back and you can see how everything is manufactured back to this right here. And I hope at this point things kind of make more sense why I'm so passionate about when I say metamorphosis journeys that nonprofit educational. This is because something that I wish I knew before, but it's never late. And at the end, I will use the quote which is in a business world, one of my favorite quotes right here. All birds find shelter during rain, but the eagle avoids rain by flying above the clouds. This sentence being goosebumps. Problems are common, but attitude makes the difference. Well, I hope everybody enjoyed it. If any questions, I'm here. Connect with me through the QR. And Brian, back to you.
All right, awesome. Anybody, if you have questions, go ahead and type those in the Q&A section. I'll go ahead and read those off. So I'm going to ask you a few questions from the presentation. People that are trying to purchase, real estate properties right now with the market, do you think they should be waiting and seeing what happens with the market because interest rates are high and property prices are high as well? Or do you think they should still go for it?
Buying real estate, the best timing is always yesterday. As if this being sad, you nailed it when you mentioned the way people hold funds and self-directed IRA, and cash is king these days. I would not postpone it. Locating the property properly is tremendous. And ultimately, people can do a joint venture equity partnership. They can purchase right now, especially because we see the trend that market property staying on the market longer and longer. Well, now is perfect timing for investors to purchase. Back to the fact, where you're buying, who is helping you during this journey. All it comes down to this point.
Okay. And if anyone wants to reach out to you, what's the best way to reach you? Can you pull up that screen again with your contact info?
Sure. The information is right here.
There you go. Yep.
Number. If anyone has questions when I'm overseas, this is WhatsApp and Telegram. Emails, just scan the QR code, and also will bring all the information, all my contact information.
Okay. So we have a question here. How difficult with the market like it is to invest internationally? And is it a safe tax shelter, or would you consider it to be too much red tape at this time due to the economy and political hurdles?
A lot of countries overseas right now, matter of fact, is the best time to invest, is because you would have to buy the lowest point. As I mentioned, Portugal, a lot of people go to Portugal. US have great connection with Portugal. If that where you wish to be, if Europe is not too far for you, it will be an option. And when we talk about Caribbean, Panama, Costa Rica, the best time to invest yesterday. What developer you buy with, and also your cash that you could probably get a HELOC or liquidate some assets here, then this cash is going to take you so much more further ahead overseas versus here. It's kind of like when we look at Costa Rica or Panama, it's kind of buying in California 20 years ago, which was of course ideal. Panama, the way they expanded the canal right now, it brings a lot of investors, a lot of businesses. The country is just booming. Back to the Dubai, right? Where you buy, how you buy. Government is fully oriented towards investors, and they are so much welcome, especially American investors, because the knowledge will have there. So no stopping, just have to have a proper plan where and how.
Yeah, no, I agree. You know, every country is different. Some require that you have residency, some require you have some type of corporation or business there. And some don't have that red tape or hurdles. But the best advice is find a good real estate attorney in that country that can help guide you with what the policies and the rules are, so you don't break any of those. You can't just go to a country and just buy the real estate. There's a lot of things that you have to do. I wouldn't say it's hurdles, because I have lots of clients buying offshore real estate. It's just understanding what the rules are and how it works in that country, because like I said, every country is different.
You know, Brian, absolutely correct. Again, I believe it's where some people prefer to start is because retirement will take you, so the system is already so strong, established, collaboration, and our retirements will take you there. Well, travel to there first and see. Back to long-term planning developer, I'm affiliated with, who also grows tea. He has plantations of tea, well knowing that 10 years, you can invest in the harvest that will be done in 3 years, 5 years, or 2 years from now. So we say right now you buy your land or your acre or quarter, whatever amount you buy at only $3,000, $5,000, or $10,000. It all depends how soon is the harvest. Well, if you have a kid who 10 years from now is going to go to college, well, you're going to need the funds for the college. And instead of digging into your saving or put it in your side, you can just possibly invest. People say it's risky. Well, it is risky, but also when you think about tea, which is already 5 years old, and harvest is going to be 10 years later, he already went through the stage where he might not go through. And it's a tree, it's gonna grow, you know, ultimately. So it's also something to consider. It's a lower entry point, but ultimately 10 years from now, it's gonna bring much more dividend.
Yeah. Yeah. You want to look at the country, how the economy is. If, you know, buying property now, you know, in 10 years, how much is it going to appreciate? I mean, we saw that happen in the United States from 2008 to now. It's a huge difference in the value in property. So definitely a best practice. Okay, the next question, is there a source of information that does the data mining for me to make the best financial decisions? I know after so many countries, it's normally based upon residency.
A lot of countries do invest, you can obtain a residency through that investment. A lot of them do. Let's say some people wish ahead of time their kids to go, for example, in the UK school system, which is not easy, but it's one of the best schools. How do you do that? Well, on a dual residency, I work with a dual residency company where you could make one spot in Canada, for example, another country that ultimately opens the gate to feel like people can go to school, right? So I would say the country where you wish to invest your vacation time, your free time, and see in the combination, I'm not saying the living on the side, in the combination overlap, how is that, how investors are welcome and what are the benefits, you know, and how can you get it to residency?
Yeah, that's great advice. Only thing is, if you buy property offshore or anywhere in your self-directed IRA, you can't live there. You can't rent it. Neither can any disqualified parties. So your spouse, parents, grandparents, children, grandchildren can't use that as a vacation property either. So just keep that in consideration if you're using an IRA to do it. But if you're doing it with your own cash, then of course you can use it.
That's why it's a teamwork. You dive into the details about that, you know?
Yeah. Let's see if there are any more questions. I have one more question here. Okay. No, it was just a correction. Okay. I think that's all the questions we have. Mariana, thank you so much for the great presentation. And then I'm going to go ahead and share my screen just for some last final announcements.
Thank you for having me, Brian.
All right. So thank you all for joining us again. So if you are interested in self-directing your IRA, you can email us at iraspecialist@NuViewTrust.com. And if you want to follow us on social media, you can find all of our recordings and our past workshops just by scanning that QR code. Best place to find it is on our website or on our YouTube page. And we usually post them the Friday after the Wednesday workshop. So that's when you can catch them. And that is all for today. We look forward to seeing you guys next week, Wednesday at 1 p.m. Have a wonderful rest of the week, everyone.